traders from across the globe, and welcome to Short-Term Trading Live with Oscar. All right, traders, this video is for Tuesday, Jan 13th, 2009. And we'll start right off with this question for you guys. Guess who can't trade wheat? Me! I can't get rewire. Forget about it. They nailed me again yesterday. Don't ask me why we got that wrong. We did get above the Omni average. The market had a nice run up. I figured, come on, let's get in. It went right back down below the Omni average. Stopped me out. But traders, listen, we had a 10-point stop, 10, 12-point stop in there. Hey, part of the game, right? So now, well, one thing we can say about yesterday at least, we had the S&P direction pegged perfectly. We were looking for the 850s. We got down to 860. So, hey, so far so good with the S&P Omnis, right? We have called direction right every day so far this year. We'll see what happens tomorrow. Speaking of which, for tomorrow, we have a bit of a formation down here, traders. I'd like to take you to take a look at a chart right now. Let's look at the formation on the chart first. Then I'll come back to you. We'll talk about the Omnis, where we'd like to trade them, and then I'll re-illustrate that formation on the board for you. So before we go any further, because we are mired in this formation for the last few days, let's go take a look at it, traders. Okay, traders, this will be the only chart I'll show you in this video. This is for the daily S&P March 09 contract, the daily bar. As you can see, so far, so good on the failure pattern. Traders, we went up there and failed, came down, got through the bottom as we thought we would of this wedge pattern, ascending if you want to call it that. We got down below it. That's what we were expecting. So far, so good technically. But now, look, traders, now something new is beginning to develop. We're getting stuck in a channel here. These channels I have showed you in many videos, they seem to work really well. You get to the top of the channel, you go short. You get to the bottom, you get out. You get back to the top, you go short again. You don't buy it at the bottom of the channel because you're in a bear market. So I don't want to get caught long anything. So I sell the top of the channel, I get out at the bottom of the channel, and I just keep doing it. That's what we're mired in now. We've gotten below the bottom of the ascending wedge. So that is obviously going to be resistance, which comes in somewhere right near the top of the channel tomorrow. Very interesting. So that tells me if you are in the ascending wedge and you've come out of it now and you're in the channel, if you get up here tomorrow, it's probably going to be a short. There's a good spot, I would think. Indicators are pointing lower. That formation clearly is bearish. Why not go for it, traders? I'm going to show you where we're looking to deal today. We've had the direction pegged perfectly for the last 10, 12 days. I think we have it right for tomorrow, traders. Let's go talk now. So, you see that chart, traders? We came down out of the ascending wedge and started to go into a parallel, I guess you want to call it a parallel channel. That is pretty good, traders. Now, I will say this. If there are any bulls out there looking to get happy, oh, Oscar, you're wrong again. You've been wrong for a year and a half. It's really going up and not down. If you nuts are still out there, remember this. Wednesday, retail sales. Thursday, jobless claims. Friday, CPI, capacity utilization. If anybody can see those numbers being strong, well, hey, you better give me a call and tell me what you see, because you know what? There is no way those reports are going to be bullish. Now, you have a bearish formation. You got absolutely what's going to be bearish reports coming out. You've had the worst unemployment since 1945. What would be the excuse to buy this thing, traders? There are none. There are no excuses to get long here. So what you want to do is you want to sell rallies. And what we're going to do for Tuesday, Jan 13th, the Emini S&P's got a red Omni pointing down once again. Omni says to sell the mid to high 870s, traders. Mid to high 870s. We're trading 872.5, 873 as we speak. We're going to sell the mid to high 870s. Of course, our stop will get put in. It will be put in a sensible place. Always place your stops. Always place them first. You know what? Before I finish this Omni, quick story that came in just a little while ago while I was in the chat room. Voodoo for you. One of our traders, Voodoo, says, Oscar, I got really lucky because I used one of your techniques. I put my stop in first in wheat and the market broke and I ended up short. Go Voodoo. He had At his stop, he placed it first. So instead of him getting in and getting stopped out, he got stopped in and ended up winning. So yeah, very good. Put your stops in first. Okay. So we're going to sell the mid to high 870s. Our stop goes in a sensible place. Profit objective this week, traders, before Friday. Omni sees a profit objective of the 830s, the low 830s. Look, last week I said we had a profit objective of the 850s and a bunch of you nuts came out and told me I was crazy. We traded 860 already. Omni's not crazy. Omni knows what's going on here, so pay attention. 830s it looks like we're going to get down to. We're looking to sell it in the 870s, but I don't think the 830s come tomorrow. Tomorrow, you have support in the 867 area, and you have support in the 856 area on the way down. So if we get lucky, we get short and it starts to break, probably we'll do some covering at those levels with half our positions, a third of our positions. We'll see how that pans out. But first things first, red Omni, sell it in the mid to high 70s. Expect by Friday the low 830s most likely, and some support on the way down, 867, and again at 856. Now traders, one more time. Can you see this? Can you guys see this from the background out there? Okay. Yeah. Here is what we're in right now. This is our ascending wedge or angle or whatever you want to call it, whatever your pet name is for it. There's a straight line here. There's an ascending line there. Our plight, or at least our projection, was that we would pop out of it and go back down into it. That was last week. We did do that. We came back down into it, but now you see the green lines. Now we are in a parallel channel, and it appears that we're heading towards the bottom of that channel right now. And I think that will be the play for the next few days. Top of the channel, bottom of the channel, top of the channel, bottom of the channel, as it works its way lower. Keep an eye out for this, traders. That is what we're in right now, undoubtedly. Even more interesting, and we'll get to this, one of our patented formations is beginning to show itself again, and it's one of these inverted head and shoulders, but we'll talk about that. See if you can spot that on the S&P chart in the formations of the last couple of weeks. See if you can find that. We'll talk about that in the chat rooms tomorrow and stuff like that. But there is one of those brewing as well. For now, though, forget about that, because this is the formation that we're in. This is the parallel that's been created, and that is all I want to concentrate on right now until it morphs into something else. We are day traders. We take it one day at a time. So it really doesn't matter to me if I think next year we're going to be at 10,000 or 3,000. It matters what we think tomorrow. Tomorrow we think we can break this thing down below the 860s. We'll see what we get out of it. All right, traders, don't forget, retail sales, jobless claims, CPI, capacity utilization. Forget about those reports being bullish. So you're going to sell rallies this week. All right, traders, I don't think there's really anything else I have to cover in this video yet. It's the new year. It's only the second week into the new year. Chugga chugga, we're starting to move along. We will get a lot more active as this year picks up. This generally is the time to start looking at the grains and looking at the softs being coffee, sugar, and cocoa and such, maybe OJ. So we do have to keep our eyes on those markets. Our mainstay, as you know, is the S&P, and we like to trade that every day. But start doing your homework in the softs and the grains, traders. You're going to see a lot of work come from me in those markets over the next couple of months. All right, traders, give me a call anytime day or night, 702-629-4755. And don't forget, come on down to my site if you'd like to be a good trader or at least become a better analyst, and especially learn the mentality behind how to execute your plan. Make sure you come on down to my site. It's www.livewithoscar.com. All right, guys, we done? Out of here. Mikey, got a suggestion? Trading contest. Are we joining it now? It's already up and running, right?
It's running right now, but you can still join.
Traders, we have a trading contest, virtual trading. We give you a $10,000 virtual account, and you win real dollar cash prizes if you come first, second, or third at the end of the week. This week's contest is already in full swing, but you can join up this week for next week's trading. If you join this week, we shoot you out your simulator. You practice all week. Next week, you're in the actual contest. Come on down. Make sure you join the contest. Again, you can find everything that you need to know about joining the contest, joining our free chat rooms, and learning about how to do analysis on commodities at www.livewithoscar.com. All right, traders, I'm out of here. Make sure you say this to yourselves every morning, every afternoon, every evening. It'll help you keep your emotions out of trading. And you know what that is? Stops are in. Emotions.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.